School of Management and Languages. Today we just talk about something very basic in accounting. It's an introduction to accounting, and actually we need to know three things. What we want to know are what is the financial accounting, who are benefit from any financial information, and actually something very basic in accounting called the accounting equation. So we'll start first with the definition of financial accounting. Financial accounting is a process of three terms: identifying, measuring, communicating financial information for an entity to help users to make any decision or any useful decisions. So before we move from this definition, actually we have very important things, which are the users of financial accounting information. This is actually my first question. Who are the users that may benefit from financial information? So anybody wants to come? So yeah. Sorry, sir. So let's continue. Who are the users that may benefit from financial information? I want actually you to get any guess. So let's say that I am a Samsung company and I want to know who benefits from my financial information. For example, I would say something, owners. Owners, of course, would benefit from financial information. Who else? Any ideas? Say anything. Who may benefit from it? Shareholders? It's owners, so it's the same. So owners are shareholders. They are just two words, so it's the same. Who else may benefit from financial information of a company? Samsung, Apple, whatever.
Potential shareholders?
Yeah, okay, potential shareholders, it's okay. So let's move from shareholders. Who else may benefit?
Employees.
Employees. What about employees? Of course they will benefit because they will know any information about this company, will help them to go, so will receive like a bonus or something like that. Who else?
I think customers.
Customers, of course, customers. So now we have customers, shareholders, potential shareholders, and employees.
Market analysts.
Market analyst, or what we call it, financial analyst. That's very good. Who else? Two or three?
Maybe HR tax office, like HR Marsty. The government, they want to know maybe you want to pay tax.
Actually, I'll give you the full answers. We have different users of financial information. We have owners, we have managers, we have employees, we have creditors, like banks, something like that. Sometimes the authorities in the city, like here the tax authority, maybe they want to know information about the profit to calculate the taxes, something like that. So we have different users of financial information. For the next step, now we know the definition of financial information and we know the users of financial information. Let's move to another thing, which is the accounting equation. What is the accounting equation? This is a very basic, this is a very core of accounting. It's assets equals to liabilities plus owner's equity. First of all, we need to know what is the definition of assets. So it's assets equals to liabilities plus owner's equity. So first of all, what is asset? Assets, it's any economic resources owned by the firm. So for example, I am a Samsung, let's say I'm a Samsung company, so I have building, so we consider building, if we own it, because maybe we rent it, not own it. So if we own it, we will consider this as an asset. What else? Say anything. Anything the company owns.
Capital.
Capital.
Financial capital.
No. Because this is a much easy. It will come later. So we can say cash by another way. I have money. So money, we consider this as an asset.
Equipment, like machines.
Equipment. Yeah. Very good.
Expertise.
Expertise. No.
Maybe in terms of patents.
Patent. Okay.
Okay.
Yeah. Which else? I'm a Samsung. What I have. What I own.
Can you call your customer base an asset?
No. If we sell a product to them and they didn't pay, we consider this as an asset. Because they didn't pay, of course they will pay in the future, so this is our money, so we consider this as an asset. We call that trade receivables.
Should I say raw materials?
Raw materials, so we consider this as inventory. Maybe raw material, maybe final product or something like that. So we consider this as inventory. Which else? If we have a land, so we consider lands as an asset. So anything owned by the firm, we consider this as an asset. Let's move to the next point. Say I want to make a company like Samsung, like Apple. So I have to have building, to have some cash, to have equipment, to have lands, inventory, and so on. So let's say that all of that, we need £1 million to have something like that. So we have to finance this money. How could we finance this money? Actually by two ways. Liabilities or owner's equity. Let's say that we are 3 partners and we have £500. 500,000 pounds. So we still need to get, or to finance the £1 million, we still need £500. We don't have other choice, we have to go and borrow. Yes, to lend this money by banks, or if we have some friends, some relatives, so we can get creditors or get this money from creditors. So maybe we will take a loan by 200, and the rest will get it from the creditors, so we have 300. Wow. So the definition of an asset is any money owned by the firm. The definition of liability, any obligations we have to pay in the future from banks, from creditors, from lenders, and so on. And the owner's equity, actually, this is the money that we have at the beginning of the company, or we can say it's the residual value by deducting liabilities from our assets. So if we say that we have 1 million and we have only 500 from liabilities, so the rest will be our owner's equity. Before we move, actually we have an exercise. I hope all of you join me to answer this. It's just we can divide into, yes, we still have time, I'm sure. Yes.
Thank you.
So the exercise, but before just one note, it's about the profit. Sometimes lots of people ask, what is the profit of the company? The profit is the revenue minus expenses. Revenue is providing any services or products to customer. This is considered as sales or revenues, and the expenses, any cost of providing this cost or providing this service. For example, rent expense, salary expense, advertising expense, all of that we consider them as an expense. So the question is, we have nine items, and we need to define these items as asset, liability, expense, or revenue. So we have 4: asset, liability, revenue, and expense. Just 1 minute. I still have 3 minutes. Just write anything: asset, liability, revenue, or expense. You need one. If you own it, it's considered as an asset. If it's an obligation, it's considered as a liability. It's a cost, like rent, advertising, so we consider this as an expense. If you provide a service or product to somebody, we consider this as a revenue. So let's start with the first one: items of finished goods inventory. It's considered as an asset, liability, asset. That's very good. So $1 loan made to a business by a US bank.
It's liability.
It's liability. This is bank loans. It's here, so we consider this as a liability. Cash held in the cash register of a shop or a restaurant or whatever.
It's an asset.
It's an asset. The cost of providing management training for key personnel.
It's expense.
Expense. It's called the cost, so of course it's expense. The amount spent on undertaking making market research to determine the best marketing strategy for a new product.
It's expense.
Expense. That's very good. Number 6, amounts charged for work done.
It depends which
Wait,
one.
what?
Be quiet.
No. So we here we take money from people to give them a service. Assets, liability. Okay, no problem. We have the idea. Revenue. That's very good. It's revenue. The last one, amounts due to lenders but not paid. Liability. Amounts due to lenders. Of course, we send obligations, so we pay in the future. So of course, this we consider them as a liability. Thank you so much for that. It's time.
Thank you, Yasser.
Sorry for that.
He's been a bit
Thank you.
Yeah.